And good morning, my futures family. Welcome to the market prep for Wednesday, June the 14th, the day we've all been waiting for. It's finally FOMC day, but we're going to focus on accurate context, good risk management, and patience. My name is John Hoagland. Thanks for trusting me with your time. This is going to be it for me till next Wednesday, going out of town for a few days. We are going to have the handsome, younger, and smarter John Doherty doing the market prep for you for the next few days. I know you guys are going to be looking forward to seeing JD again. And what are we looking at today? Well, mortgage rates came out. They are actually a little bit lower than last week, which is good. Applications for mortgages took a big jump to the upside. Last week was minus 1.4%. This week up 7.2% in the number of applications for mortgages. 7:30, the PPI numbers came out, also like the CPI numbers yesterday, indicating slowing of inflation. 9:30, the crude inventory is due out. 1 p.m. Central, of course, the FOMC announcement. And more, I think, of the talking feds or the trading community are agreeing that they're likely to pause the increase in interest rates, which would probably be a good thing for us. We don't know, however, how the markets are going to respond to that. It's going to be an exciting afternoon. And then at 1:30, of course, Chairman Powell will have his presser. So this morning, stock index futures somewhat mixed. The Dow's a little bit lower. The E-mini S&P and the NASDAQ are slightly higher this morning as investors are continuing to await that closely watched rate decision to see if the Fed chooses to pause on those interest rates or to further increase borrowing costs. Today, I guess yesterday, the graphics card maker NVIDIA made it to the $1 trillion valuation club. It actually closed above that benchmark yesterday. Of course, we know that that's all fueled by interest in AI. This morning, the VIX lower than yesterday. Yesterday, it was 15.03. Today, 14.62, actually up a little bit from yesterday's close. Dollar index back down below 103, 102.99. He was 103.33 at this time yesterday, and the yield on the 10-year largely flat this morning at 3.79%. It was 3.7% yesterday. All 7 of our markets had one extreme or the other of the regular trading hour at one extreme of the initial balance. We're keeping track of that. It's still, we'll let you know when I get to 30 instances, so we'll have some really kind of substantial information about that. Make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Subscribe to our YouTube channel to get notifications when we do go live for many events that we do here, and we're going to be expanding those very soon. I'm going to take a little vacation. We're going to be getting started on Top Step TV very shortly after that. Again, I will be off for the next few days. I am going to miss you. I will, however, be doing Make Hoag Money today at 2 o'clock, which is after the FOMC and all that thing happens. We'll see if we can find some opportunities there. And I will miss you. Do have to take a little bit of time off, though. Caprice 101, first in the room again this morning, winning the prize. General, good morning. Shaw, good morning. Lacey says good morning to everybody as well. Timothy, Dan Trader, Alejandro, John, Henry, Josiah, Stephen, Eric, Jay. Oh, I got lost. Where am I? Okay, here I am. Chaz, Charles March, good morning. Matthew, good morning. Grounds Hero. Denise, Chris, Bill, Joe, good morning. Gratitude, great word for this morning, Joe. Casey the Rooster, Josiah again, good morning. Kaylee looks like, Phil, Jason, Chris, Dr. VJ, good morning. Robert, good morning. Dennis, Rusty Golfer, Travis, good morning. Hoag, think we're expecting bullish activity except for Randolph, right? Based on the inflation numbers and anticipated pause in rate hikes, but the most violent moves could come from the 1:30 press conference and could move the market in either direction based on Jay Powell's forecasting and tone. Absolutely, Travis. George, good morning. And Lacey says good morning to you as well. Stephen J. Sarah Hall, prayers and love to you as always. Stephen, the stash, loving the new overlay. Well, it's good. Good. We're liking it's all part of the improvements we're making for Top Step TV. Jason, Naztic, Amanda, good morning. What day does the open interest start to matter again in the S&Ps? Monday. Friday is quadruple witching day. So we're going to have the expiration of the equities, option expiration, a whole bunch of things expire on Friday, which makes it quadruple witching day. And Monday, we'll see a big drop in open interest in the S&Ps, probably somewhere between 400,000 and 500,000 contracts will evaporate at expiration. And then we'll be able to lean back on open interest. And it's good that the equities only roll every 3 months because you got crude oil, you got natural gas that roll every month. So you have just lots of periods where the dependability of the information that you're getting from open interest is very blurry. It's just hard to read when that happens. And that's a great question, Amanda. Les, good morning. Fred. Thank you, Fred. Yeah, we're going to enjoy a little sun and fun down in Florida. Alfred, Paul, Charles, Chart Language, Shy T, down 400, fighting back. Well, it's okay to fight back as long as you're not angry, emotional. Just be careful. FVB, good morning. I got lost again here. Family fun time. Good morning. See a couple of new people saying good morning here this morning, and thank you for joining and saying good morning. Jimmy Decker, good morning. I will miss you too, Dr. VJ. Haggle Matters. Yes, we are looking forward to having a nice time. Thank you all very much for that. No, Lacey's not. She's going to stay home with my son. And they'll have some good time together, I'm sure. FVB, when can we trade and can't we trade? It's Monday and Tuesday in Europe. Is it Monday and Tuesday in Europe? I'm not sure what the trading hours are for Monday and Tuesday. I think we sent out an email about that. Check your emails, or if you haven't seen it, check your spam. Good morning, Trading Research and Jonathan. All right. So again, we'll be looking forward to seeing JD tomorrow, Friday, Monday, and Tuesday. Rollovers. Crude oil, you're probably going to want to move to August either today or tomorrow. The volume is looking relatively even. Also, currencies are probably going to roll tomorrow. So we've rolled in our equities from the June to the September contract. Crude oil, you're going to move to the August contract either today or tomorrow. Currencies either today or tomorrow. And sometime I think next week, natural gas, if you're trading natural gas. Just watch the volume. If the volume is higher in the August month for the energies, or the September month for the euro tomorrow morning, make sure you switch over. Just putting that out there for you. I'm sure JD will be letting you know also. And we will be checking out the next oil roll. Yeah, again, is today or tomorrow. I was looking here a little while ago at that. Let me take another look here. So the July contract has about 82,000 contracts. The August contract is showing about a half of that, about 40,000 contracts. So I'm thinking probably tomorrow will be the day we're going to want to switch that information. Hang on just a second here. I lost my screen here. And there we go. Okay. All right. All right. Now, why don't we jump into the charts and we'll take a look and see what's going on here. All right. So it is FOMC day. And one of the things that we talk about a lot here on the market prep and the market reflection and everything here is, anything can happen. We already had some conversation about whatever the number is, whatever they do to rates, the chair presser after that might actually be more impactful than the actual release when we find out what they're thinking, what they're talking about doing here in the future. So the fact that it's rollover is making the ability to gauge the health of the upside auction, which looks great on paper, because we're getting kind of blurry information, right? We've had all this open interest piling in, but that's a function of rollover. We had 171,000 contracts pile in the S&Ps just yesterday. We've been seeing, it was 109,000 the day before that. So part of, that is a function of rollover. How much of that is actual directional activity, new longs coming in, can't be known. So it is difficult to read during rollover. If it wasn't rollover and we were seeing these kind of jumps in open interest, I would be probably buying the S&Ps with both hands. But again, we don't know. So we're looking at a potential measured move if this market continues to push higher, up around 44.60 approximately. But again, anything can happen. On paper, this looks like a very healthy auction. When you look at the volume is just coming into the September month. It's greater than it is in the June month. So you're seeing June volume dropping while September volume is rising. But what's the real volume? Because the spread information and the rollover information is also put into the volume. So again, it becomes very difficult. So I can't really give this auction process a grade because it's rollover. Looking forward to coming back after a little time off to a market that is not in rollover. So we're going to trade what we see. Well, what do we see? We see a market that has accepted above an important inflection level. We gapped higher yesterday. That's not necessarily a good thing. That's maybe a little bit of weaker structure down below. We're going to be opening probably above value. Do we have any overnight inventory? I'm going with not really. If we do it, maybe a little bit to the long side. Are we going to open with a gap or are we not? Doesn't look like we are at this point. So the S&Ps actually kind of look like they were a little bit stronger yesterday than the NASDAQ. The NASDAQ actually closed this gap, but that's kind of stronger structure down below. What does all this mean? Well, we don't know what's going to happen. We never do. I wish I could predict. I wish I could tell everybody, just buy it on the open because it's going to the moon, or just sell it on the open because it's going to the floor. You can't do that. We don't know how traders and investors are going to respond to what happens today, the FOMC meeting. I'm seeing a lot of articles, some articles saying it's going to the moon, some articles saying the rally can't hold. Some articles talking about the fact that we're starting to get into greed and FOMO at these levels. What's the real story? Nobody really knows. The best economist is often wrong. So we got to just trade what we see and respond to what the market is telling us. Try and use market-generated information. It's the best information we have. So the market-generated information in the TPO charts, almost a normal trading day. Lower extreme of the initial balance, the lower extreme of the regular trading hours. Range bound, weak high, excess low, gap below, opening and holding above a late spike. The market has been accepting higher pricing based on that late spike we had the day before yesterday. It looks like it's overlapping to higher in the overnight. Follow the value. Value is moving higher. Look for opportunities to perhaps buy weakness today. Be patient. We don't know what's going to happen here. at 1 o'clock. We're going to probably see us spend a little time together during Make Hope Monday to see what happens. Stephen, you're right. You know, that we've got lots of weak structure down below. Naked point of control, TPO, volume point of control, TPO point of control. There's lots of leftover unfinished business down there. We got another TPO down here. We got another gap here. So there's weak structure below. It's going to come into play when it comes into play. So watch, you know, I'm not expecting a lot to happen here before the FOMC meeting. Stay patient. And I like Joe's idea of gratitude. Gratitude, always good. All right. So in crude oil, again, we're in a roll. We're going to change to August tomorrow. But for today, the July contract is showing rejection at lower pricing. We tested and closed below the weekly kickoff low. We have basically a bullish piercing pattern. We've left an island low down here below. We'll see that in the 30-minute chart and the TPO chart. And the market is continuing to try to push to the upside. We lost open interest yesterday of approximately 21,000. Is that rollover, or is that short covering, or is it a combination of both? It's what rollover does, right? So here's the 30-minute chart. Here's our island low. We gapped to it. We gapped away from it. We have not closed that gap. That keeps weekly kickoff low as a support level. Yep, 68.20. So that keeps weekly kickoff low as a support level. What are we doing today? Well, we've got overnight longs. We've opened with a gap. If we can't fill the gap, we're looking for opportunities to push price higher. We've got to close the gap relatively early. I know that's a subjective term, but that gap close can also end up being supportive. It's if we do find acceptance inside of range and value from yesterday, that's when the opportunity, I think, to look for longs may be a little bit further down. We opened out of range, out of value. The value area special situation play could come into play today. Price comes back into value from yesterday and accepts. The probability is that price will reach the other extreme of value at some point during the trading day. Acceptance is also subjective. It's a hard play to take because you can get cut up, give up on it before it actually gives you the chance to succeed with it. So opening with a gap, if we're unable to close the gap relatively early, we're still looking for opportunities for price to move higher. We have a reversal pattern down here. The island low, the bullish piercing pattern, all indicating price got too cheap. What about the NASDAQ? Our weekly kickoff high, point of contention yesterday, point of contention last night. A little resistance here, huh? Yeah, auction health, again, the same as the S&P is unknown. We added 21,000 in open interest yesterday, but that's probably more of a function of rollover than new directional activity. We are now at a level where we would be looking for longer time frame traders to adjust inventory. But my bet is that they're not interested in doing that if they can avoid it. They want to get a cheap roll. So that's going to, I think, make this resistance area up here a little tougher to get through. It's FOMC day. ACH, anything can happen. Here's the 30-minute chart. So we tested up to it yesterday in regular trading hours. We did close the gap in the NASDAQ where we did not in the S&Ps. We got into the late spike, but we never took out the low of the late spike. We were pretty far from that. So do we have any overnight inventory? No, we don't. Are we opening with a gap? Probably not. That would mean we'd be opening above the weekly kickoff high, which would be a pretty positive thing. This green line up here is left from last year. There is a naked point of control up here somewhere. I don't know what contract month it's from, but it still remains on my chart. So there is a potential to go back and check this point of control, which could be, in a range of areas here, depending on the contract month that it was. So I'm just going to leave it on there and see if it does anything. I'm not using it as a target or a level to execute at. I just want to see if there's any kind of response to it. Overnight, flat. In range, yes. In value, looking like it might be. I'm going to just chill. I don't know how I didn't get the settlement on here. I'm going to just chill. 99. That's going to be close enough for rock and roll. So I'm going to just chill if I'm trading the NASDAQ. What about the TPO chart? Is there any help here? It's a normal trading day. Both extremes of the initial balance envelop the regular trading hour range. It's a normal trading day, maybe a little bit extreme. Unusual, especially for the NASDAQ. So it kind of tells us that the market was really kind of holding off any directional activity or any big moves yesterday because of the FOMC today. So extremes on both sides, centrally located, overlapping the higher range in the overnight. But again, we're back in range, we're back in value, stay patient. Just sit back and be grateful. I'm grateful every day that I get to do this, even on the bad days. Even on the bad days. Gold. Balance remains. On the reflection yesterday, we talked about, I'm going to be really interested to see if we added any open interest on this push down to last week's low, and we didn't. We added maybe 400 contracts. Still in short time frame control. Still a little long time frame interest in this market. Going to be kind of random walks anytime we're in the middle of this range, kind of where we are now. Here's the 30-minute chart. Overnight inventory until recently was flat. We see the dollar taking a hit. Now finally the gold is responding to it. It didn't respond to it yesterday. It came down, tested the last week's low. So what do we have here? Well, I was looking at this earlier thinking, we're either going to accept the range value from yesterday and repair a whole bunch of this profile from yesterday. It was kind of a trend day, or we're going to reject value and test down to the last week's low, yesterday's low, and maybe get a look at weekly kickoff low. Obviously, the 730 number has taken the dollar lower a little bit, and we see now finally some response from gold. So we're looking for a potential repair from yesterday's profile, and here it is. IB high, trending lower all day, finally I can't decide whether I want to call this a normal trading day extreme or a trend day that just kind of stopped at this low, which gold has a tendency to do. It has a tendency to make its move and then sit there. Here, case in point, here. Case in point, here. Case in point, here. I mean, it just goes and then sits. So we're in range, we're in value. We probably may just kind of repair some of this area here and then wait for 1 o'clock. Here is the euro, tested to weekly kickoff high yesterday and rejected. Now it's open. It is building possibly some volume. This could be a pretty good market state change. We've been seeing the market putting up higher lows and higher highs. The first change, possible market state break, was closing above the last week high yesterday. Now we're looking at a potential another market state breaker, which would be acceptance above weekly kickoff high. We added 37,000, in open interest yesterday. Again, possibly, or even probably a function of rollover. Volume was really good yesterday in the June contract. So another day or so we'll be moving into the September contract. But the market, still showing more volume in the June contract. So here we are. The market is really trying to push higher here. Let's take a look at the 30-minute chart. So here's the yesterday's range. Also a normal trading day. Both extremes of the initial balance were the extremes of the regular trading hours. Now we've got to move away from value. If this market starts to build momentum, spend time, build volume, or build participation up here, a continuation is likely, even though it's rollover. This is an important inflection level in the weekly kickoff high, and this might be enough to push the longer time frame traders into continuation mode, into adjusting inventory, either getting out of shorts or getting into longs in the euro. Here's the TPO chart from yesterday. It's just going to show a normal trading day, both extremes of the IB, normal, neutral day. Now, possible acceptance of higher pricing. Here's the 10-year. So kind of maintaining downside structure here. We added 11,000 in open interest yesterday. This is not in rollover, but that's not a huge number. It's kind of an anemic number for a breakout below the previous week. It was the previous weekly low. We're kind of fighting against that now because a lot of folks are thinking that they're going to hold on rates, which might give a bid to the 10-year and some of the other treasuries. So we're going to see if we can monitor for continuation below last week's low if we get back down there. Volume was great yesterday, but again, that open interest increase of only 11,000 was somewhat anemic and hollow on that continuation to the downside. Here's the 30-minute. Unable to take out yesterday's low. Market, I think a lot of folks are kind of aligning with the idea that they're not going to change rates. So there's a lot of repair quite possible in this profile from yesterday. Again, it's kind of another trend day to the downside. Did we get too short on this? What's the deal? Here's the TPO chart. So I'm considering this a late spike. So the market did open in the late spike. Well, if we do spend some time above the base of this late spike, which is 113.01.5 ticks, that's going to mark rejection of lower pricing. We opened trying to accept lower pricing. If we can't and we start to build value or volume back inside value from yesterday, I could see this market rip into the other side. And we'll take one brief look here at the natural gas. It is also in rollover. Probably some point early next week we'll switch. Still inside last week's range, testing to last week's high before the open here. Really still kind of range bound. Let's see, 1, 2, 3, 4, 5 days in range. Here's the 30-minute chart. Overnight inventory was long, and all those longs really bailed here coming into the open and after the open. We're now flat. Our overnight inventory has reconciled, and it's put us kind of at an open and an opportunity to kind of relax a little bit because we are in range and inside of value. Look for better trade locations as the day goes on. Here's the TPO chart from yesterday. IB high, normal variation, neutral day. Look where we are. Stay patient. Stay patient. Better trade locations are likely to come later on. All right. Fred. Looks to me like the S&P got short-term inventory too long yesterday. There was a late break, but the break was large enough was the break large enough to correct inventory, or is inventory still too long? That is the big question, Fred. Because of rollover, it's so hard to tell because we're not able to gauge, what kind of participation brought price up here. Being rollover, I tend to think that it's probably shorter time frame speculators, and there are some pretty big speculators out there. And by shorter time frame, I'm not really talking about day traders. I'm talking about more swing or kind of longer term speculators that have brought price up to this level. And at the same time, Fred, I've read a few articles and heard a few things about the longer time frame hedger type traders, the big people, have been waiting for a pullback to invest back into some of these equity indices. So it's looking at, with all that information and what we have, it feels to me like we're too long in speculator timeframes. And that could be a bad thing, even if it's a good number or they don't do anything or he says something kind of positive for stocks. I think that the longer time frame traders are probably going to wait for a pullback before reinvesting, because I do think that they're a little bit underinvested. They've been waiting for some kind of a pullback. Here's the daily chart. I've heard people talking about the longer time frame traders looking for like a 10 to 15% correction. Now, yesterday I was laughing because one of the companies here. Now, the three most popular articles on investing.com. This one's from today. Bullish exuberance returns. FOMO kicks in. A contrarian signal. And then the one after that, 4 reasons the U.S. stock market could continue to rally. And then the article below that, U.S. stock market's weak rally appears unsustainable. What is a trader to think of all that? So without the benefit of open interest and volume and being able to kind of depend on that, that's why I can't give this auction process a grade, Fred. Usually I'll say, well, we've got volume, we've got open interest, the market's moving higher. This is a healthy auction, and I'm looking for the opportunity for it to continue. So I'm going to be buying weaknesses, but I can't even do that because I don't have that information. That's why rollover is I'm just going to say it's a pickle. Rollover is a pickle. So we're going to find out, I think, a little bit about who is our buyers up at this level after the FOMC meeting. If nobody comes in to perpetuate this rally after that number comes out, you're me. And if we're right in that assumption, which everything is a hypothesis, we don't know for sure about anything, but if we're right in that assumption, and the shorter time frame to medium time frame speculators are the ones that have pushed price up here, and there's no perpetuation of any time frame continuing to buy it up here, we may see this market, pull back. I don't know how serious, I don't know how big, but we're in, I think, a situation where we may be thinking about buying the rumor and selling the news. Now, I don't know. I'm not suggesting anything. I'm not predicting anything, but it's just a hypothesis. And we're going to see what happens at the, after the end of the day here. We'll maybe spend some time on Make Hope Money, just kind of talking about the reaction. Who knows what's going to happen? As we always say, ACH, anything can happen. So, well, let's take our deep breath. I should say. Stay humble, grateful, creative, and centered today. I am going to miss you all. It's going to be a whole week before I get to sit here and talk to you all again. Hoping you have a great time. Hope you have a great weekend. I hope the trading is good to you. I hope you're good to yourself. And of course, be kind to others. Say a prayer for peace. And I will be back in a week. Trade well, everybody. Be patient. If you get angry, walk away. Just doesn't help the decision-making process. Find a way to let that venom out, get yourself back to center, and then re-engage. But have a great rest of the week, great weekend, great early week next week, and I'll see you next Wednesday. Have a good day.